Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah. We are a bit delayed today. There's a software bug which kind of refuses to go away, so excuse us for that. I wanted to show you a bunch of charts really, which would have told you with reason what I was trying to convey today. Be that as it may, we'll try and show you some things. Now, keep in mind, is something that we told you a few days back about how volatility tends to come back very, very quickly in the month of August in a big fashion. And mind you, just showing that again, that big blue bar in the middle is the return of volatility. Now, yesterday's trade in India would have made people believe that volatility is coming back. Now, of course, India VIX did not do that, but individual portfolios, I think, told all of us that. Today is a slightly different day. The scare is nowhere as close to what it was yesterday. The global markets did okay. Asia and SGX Nifty are doing okay, flattish moves, so no big changes there. Again, like I said, I unfortunately can't show you the charts, but I'm telling you, you can hear me, that we'll probably have a flattish start. Though that doesn't mean anything, right? Yesterday, no matter what the start was, the day proved to be terrible for individual portfolios. The thing to keep in mind, viewers, and just watch out for a couple of these things. You can do these checks on your own. Keep an eye out on the dollar index and the way it's inching up. It could have a profound impact on commodities, though commodities did bounce back yesterday, but dollar index nudging towards the 94 mark could be interesting. India VIX hasn't shown any kind of a big movement, and the risk on trade is very much alive and kicking by virtue of Bitcoin now trading near $45,000 at 27, 28,000. Everybody was writing obituaries for Bitcoin. It's bounced back, and how suddenly the $1 lakh per Bitcoin mark is in vogue again. Okay, so if that's the long and short of it, how should you trade? Will there be a bit of a bounce today? I would reckon at the broader end of the spectrum, while pain, the kind of pain that was there yesterday doesn't go away in a hurry, I think there should be a semblance of sanity, particularly in some of the commodity names in sugar, which really got punished brutally. I think there could be uh, a bit of a normalcy situation there. Key earnings today include Bata, Pidilite, Cadilla, Bajaj Electricals, Viatec Vabag would be an interesting one. India Cement should be interesting. So these are a few names that one should be watching out for when it comes to numbers. Now, why I say sugar stocks, for example, might have a bit of a okay move, right? If you just look at sugar prices overnight, I think the last 24 hours they've surged about 6.5%, and now sugar prices are inching towards the 20 cents to pound mark, and that should be very, very interesting. So big spike in sugar prices in trade yesterday. You can look at it across various websites, and it'll tell you there's some positivity, and therefore watch out for a potential bounce back in some of the sugar stocks in today's session. Praj was locked in a 5% lower circuit ahead of the numbers today. Could be interesting what that one does. Some other names: Lupin, consolidated numbers, quarter on, essentially what they've done versus estimates. 4237 versus estimates of 4178, slightly better than estimates. Net profit substantially better than estimates. 474 crores was the estimate, and 542 crores is what they've come out with. And margins at 21%, just in line with estimates. So slightly better profitability. Let's see if the stock has a bit of a reaction. Brokerages were largely neutral, at least the first cuts. Godrej Agrovet, quarter on quarter, was a pretty strong set of numbers. Revenues up 36%, EBITDA up 51%, net profit up 87%. So very strong show sequentially. I reckon the stock could do well today. Watch out for this one. Siemens, I think, while you could argue that the numbers were largely mixed, and I'll tell you why. Very impressive was the order inflow, really. First, the numbers. So for Siemens, consolidated revenue growth 140% YOY, slightly ahead of estimates. Standalone order intake 4,300 crores, up 31% quarter on quarter, which is the highest since quarter two. And the total order backlog, not the intake, but the order backlog at 14,300 crores, which is the highest ever order backlog for Siemens. That is telling you something, viewers. What's happening with the order books of an ABB, a Siemens, and some of the others is telling you a thing or two. EBITDA margin, as I said, it was a mixed bag because all of these were good, particularly the order flow. EBITDA margin was down quarter on quarter because of higher employee costs, which was up about 25% YOY and 16% quarter on quarter. Wage inflation is out there, and consolidated PAT, of course, was down 47% quarter on quarter because other income dropped, depreciation increased 39%. So all of that was slightly tough for Siemens. The question is, will the street take heart from the order backlog? I think that is what will happen. GMR Infra, there's a board meet to consider fundraising up to 6,000 crores via QIP or FCCBs, what have you. Interesting. These businesses somehow, some of them keep on needing money, keep on doing equity dilution. The airport business is great, but uh, multiple businesses available which are not diluting equity. I don't know why people would want a heavily equity diluting business. Be that as it may, it would be interesting to see if there is some bit of run up, etc., in anticipation of this. Dynamatic Technologies could have a bit of a reaction simply because of the name of the buyers. So the promoter entities sold and gave some stake to Madhusudan Kela, arguably in the name of his relative, as well as Sunil Singhania's Abacus Emerging Opportunities Fund. This stock might react. Typically, when these names get involved, the stocks tend to show a bit of a reaction. I'm not in favor of buying a company just because somebody else has bought. Please be very careful. You would not know when the U-turn might happen if it does. But for now, I would presume it's a safe assumption that the stock would do well. So do watch out for Dynamatic. Watch out for Trent. Jeffries is downgraded to hold post the numbers. They say that while larger point is the last line, that it benefits from a reopening rally, but it's partially captured in the close to 25% price rally in the last 3 months. So the other things are on par. It was a below normal quarter. The trend is improving now as stores are opening up, but the stock has had a bit of a rally, and Jeffries believes it's pricing in the positives already. I'll watch out for some other stocks. Radico Khaitan, for example, Goldman Sachs has initiated with a buy rating, a target price of 1144. Zomato had a decent start to the year despite the large loss. UBS has maintained a buy. Coal India was a lackluster quarter one, but brokerages are divided. Jeffries has a target of 135 per share. JP Morgan is a target of 200 rupees per share. So it's pretty interesting as to what's really happened. And just to wrap it up, keep in mind, like I said, quite unlike the day's trade yesterday, today US markets were a bit calm, futures are a bit calm, and therefore that is slightly positive news. And Asia and SGX too are showing signs of you know no big cracks. Quite unlike what was the belief yesterday at close that we'll have a sharp follow-up crackdown. I don't think we are quite doing that. SGX Nifty must be showing a start which is flattish to marginally in the red. Uh, it was slightly negative bias when I saw it about half an hour ago. For now, maybe a bit of a positive bias. So maybe this is good news. But let's see, I think what is to be watched out for is the mid cap space. I mean, if we had that MOV function, I would have shown you how the advanced decline ratio in individual portfolios, especially in the small cap side, was really, really bad. Everything from sugar to steel uh, to mid cap names corrected very, very significantly yesterday. Uh, Typically, when things happen like that, they don't tend to have a sustainable bounce back immediately. Look at this. Look at the market breadth, up down 94 to 407. That's the point I was trying to make. So individual portfolios bled really badly. The question is, can they come back meaningfully? Will this be a, a crack that is immediately got bought into? Let's see. Time will tell. Stay safe, viewers. Thanks so much for tuning into the trade setup. Apologies for the delay. There's a bit of a software bug. Hopefully, won't happen again. Thanks so much for tuning in today.